Hello students and welcome back. In today's class I am going to start Accountancy syllabus of 12th Commerce, a chapter called Cash Flow. Now the whole of Accountancy syllabus is divided into two distinct categories, part A and part B. This cash flow statement chapter which I am going to start today belongs to part B section. Now in your HS question paper there is a compulsory 6 marks question coming from this chapter. So this is a very important chapter. So let's start cash flow statement. Before starting the chapter I just want to introduce what cash flow actually is. Cash flow implies the flow of cash into a business and flow of cash from the business, that is inflow and outflow of cash from the business. And cash flow statement is a statement which shows the inflow and outflow of cash of an enterprise in one accounting period, say 1 year or a month. It is a statement which helps to reconcile the opening cash balance and the closing cash balance of an enterprise. It is very helpful for the accounting information users for identifying the different source of cash and the different uses of cash. Now, cash can be generated and it can be utilized. If we separately show what are the sources of cash and what are the applications of cash, then we are going to get different things. Let's see what is it. Suppose in an organization, there are two things. One is the source of cash. That means from cash will generate, cash will come in an enterprise. And the second is the uses of cash. That is the different applications of cash. How it will be used in the organization. So see, I have written two things, sources of cash and uses of cash. Means how cash will be generated in the organization and how cash will be utilized in the organization. So what are the sources of the cash? From where we can get cash is, there are different sources like say loan from bank or any other financial institution. Through loan we can generate cash. Through sale of any kind of investment, sale of land and building, cash can be generated. Or issue of equity share, cash can be generated. Or by accepting any kind of public deposit, cash can be generated. So there are different sources of cash: loan from bank, acceptance of public deposit, or you can say sale of investment, any kind of investment, land or building, machinery, and you can also say issue of shares. So these are the different sources of cash, means from where cash will generate, cash will come in the organization. And the second one is how cash will be utilized, that is uses of cash. Say it can be utilized by repayment, used for repayment of loan, then purchase of any asset, any fixed asset, purchase of any fixed asset. Cash can be used for purchasing of any fixed asset. It can be used for repayment of loan. It can be used for payment of any preliminary expenses or for payment of any kind of tax, any kind of income tax. So these are the different uses of cash. This is what I am going to explain, that what are the uses of cash and what are the sources of cash. In an organization there are different sources of cash and different uses of cash, and cash flow is all about these inflow and outflow of cash. Now this cash flow statement is very helpful. It is important for every business. Why? Because it helps to assess how firm generates different cash, whether firm has the sufficient cash for its survival, for maintaining the liquidity, or for maintaining the profitability of the firm. This cash flow statement is very useful. If there is any negative cash flow for more than one accounting period, then there is a strong and potential form of problems that can affect different activities in the firm. So cash flow is very important. It is also extremely useful for proper financial planning and control, and it provides the basis for evaluating an enterprise's different cashes. So that is why cash flow is very important to us. Also, we need to know the different other advantages of cash flow. That is, it provides information about the enterprise's flexibility, the ability of the enterprise to generate cash. It also ensures the firm's capacity to meet all the obligations. It also helps to assess the reliability of the firm's net profit, the net profit that the firm has earned, how much it is reliable. That can be assessed through this cash flow. It is also helpful in ascertaining the financial needs and also the non-financial needs of an enterprise. It enables the users to assess why the assets and liabilities increases or decreases in an organization. So these are the different utilities of cash flow. It is very important, but it is always concerning with the inflows and outflow of cash. Now, cash flow is prepared according to Accounting Standard 3 as issued by ICAI, that is Institute of Chartered Accountants of India. It is maintained under AS3, that is Accounting Standard 3. Now, this cash flow, when we will do the sum, we will see that this cash flow is divided into three different activities, three different categories. And what are those three different activities? One is the operating activity, another is the investment activity, and the third one is the financial activity. So when we will do the sum of cash flow, we can see that these three categories are included in the sum. How we show the inflow and outflow of cash, and how the cash balance, opening cash balance and closing cash balance is maintained through these three activities, we can see that with the help of the sum, which I am going to do in the following classes. So please follow all the classes. I hope whatever I have explained today about cash flow you have understood. This is just an introductory class of cash flow. More classes to come, so follow the classes. Hope you have understood all the things that I have explained today. So today up till this, goodbye.